Oil prices, critical to determining the pattern of inflation, got slammed to $20 a barrel, now back up to 35, critically geared to demand and also the supply side from the US oil rig count. And currencies, we've seen sterling trading at 123 at the moment, and against 110 against the dollar. The markets quickly recovery in the Dow. Nasdaq really made a big bounce back with the tech stocks. Now they've got hammered with the threat of action from the president against Twitter and social media stocks. SP index, wider SP index, similar pattern to the Dow, and so it is with the European indices, the recovery here. And in China, slightly better picture. Hong Kong getting slammed at the moment because of the political situation, and in Japan, strong recovery in Japan. So there we are. That's the end of the specific newscast. We've covered quite a lot of ground in a short space of time. I'm gonna stop the share screen, and in a moment, I'm gonna do, yeah, stop the share screen and come back online. So hopefully here I am. So a lot of ground we covered. It's always the way on these presentations. I hope you thought it was interesting. Some questions that have come up. Yeah, okay, first of all, Alexander saying, Haldane came out this week saying he felt the latest data was a shade better than expected as reported by The Guardian. Well, the information largely at the moment is coming from the market PMI data, which showed a crushing setback in the data for end of March, April, and then a bounce back in the data for, in terms of the opinion on the composite indices for the UK and for Europe. So yeah, slight improvement we think, but actually market PMI data is a mood swing index. So you're going to see that at the moment, but hopefully it will get better. April will have been the worst set of numbers and they'll get better in through May and June. But the quarter two overall is still going to look pretty ugly. So Catherine's saying, can we copy the slides? Yeah, the slides, I'll send you the links to the slides in the follow-up email. So going back to cues, some cues on the presentation. Yeah, okay. Yeah, whereas we talked about that, the stats on infection and fatality rate, they vary according to different markets. The point I was trying to make was something else. John saying, why were there visible government advisors representing business? Well, I think we're getting a lot of information from the CBI and the Chambers of Commerce and the IOD and the Federation of Small Businesses and Make UK, but the representations were swamped by the opinions coming in from the SAGE group, the scientific group, and scientific modelling group. You walk into a young cabinet, Boris Johnson saying, look, unless you do something, there could be 500,000 deaths in the UK. That's a heck of a burden and a heck of a decision for somebody to make. So yeah, I think there were business advisors and they did get a fair crack. Yeah, it's saying, is there any clear reason why deaths per million in the UK are higher than in, say, other European countries? Yeah, I guess there are many, but this is not my speciality and not my field. I think, there's a lot of paperwork, a lot of research papers to come in the months and years ahead that will cover a lot of this ground. So Peter's saying, so most European countries are suggesting a V recession, add Hong Kong to the occasion, China, the co-war, then this is a problem. Well, what we're representing here is this one scenario. You can't come up with an accurate forecast at the moment because we've never actually been here before and we don't know necessarily how it's going to pan out. So we give one representative scenario. As always, businesses should look at this scenario and develop their own model scenarios, which can be better or worse. I'm not sure that Hong Kong is going to make a vast difference to the recovery to the shape of the recovery in the world at large. China is going to be critical. China is going to bounce back because it's going to pump so much money into the economy. It has the option of boosting its defense spending, which would send nervousness around the world. So, more nuclear subs, more aircraft carriers. Slight worry about the US, the biggest economy in the world. Are they moving too soon? Chaos over the policy from Trump. Should you inject Dettol into your bloodstream? Should you be mocked for wearing a mask? In Georgia, they're opening the tattoo parlors and the bowling alleys. Las Vegas is opening completely. Florida's, hopefully Disney's going to open safely in Florida. But the danger is the US will move too soon, whereas for Europe, or certainly for the UK, we could well have the basic scenario, the broad line scenario would be the V-shaped recovery. So Paul's asking about, yeah, so just the end of the question I was smiling at. But the recovery in 2021 seems to be getting back to normal. So yeah, I mean, I think the behavioral economics has been built into this after a certain fashion, especially in areas where people are nervous about, they've been brainwashed into fearing going out into the world. And I think that, people are nervous. If you walk around the streets today, even in Manchester, people are far more relaxed about reacting with people as they walk along there. So I think that, the return to normality in terms of social conditioning and social behavior will come back much more quickly than the doomsayers would have us think at the moment, which linked on to a pretty good question about, from Jed saying, in last studies, Economist, we suggested social distancing would be kicked into touch. So yeah, I think the 2-meter rule doesn't sit happily with the WHO, World Health Organization, talking about 1 meter. And it certainly doesn't sit happy with the leisure industry when for pubs and restaurants and hotels and so on, this idea of 2 meters seems quite farcical. It is advisory. It's under question. The government are going to have to choose their moment for rollback. The big concession on families getting together today was something. They've been batting off the battering from over Dominic Cummings, but it has to come in the next couple of weeks, I think, because it's a key component of getting life back to normal, as is the abandonment of Priti Patel's quarantine bridge into Europe. So, okay, well, yeah, good, thanks for that. That's very nice. So yeah, so I think I've dealt with most of the questions so far. So Manny saying, will government refocus the economy towards manufacturing? Yeah. The march of the makers rebuilding the workshop of the world. Yeah, sorry, I don't think we're going to see it this time. We didn't see it last time. When I kept my first job after LSE, London School of Economics, I was working with one of the largest engineering companies in the world, and in the UK, certainly, and in the world. And we, as a trainee, we went around Raleigh Bicycles, Credo Cookers, Russell Hobbs, British Steel, British Aluminium, and I was trained as a manufacturing manager, albeit in marketing. But yeah, so no, there may be, but I really don't see that's going to happen this time. Implications for government investment plans. Yeah, pretty bullish there, because I think that, the government debt will be allowed to soar. The deficit will go to 300 billion. The debt to GDP ratio is going to soar to about 120, 125%. There could be 2.5 trillion of gilts outstanding, but the Bank of England is standing there as the lender of last resort with this dire straits, money for nothing, gilts for free program. And that over time, one could easily see that 500 million of gilt debt would just evaporate from the system as the deficit or the liability for the Treasury is evaporated by the asset that sits in the Bank of England. Highly controversial, that bit, actually, but we're touching new ground there. Yeah, question there about the housing market. I'm pretty optimistic about the housing market, although most are suggesting there could be something like a 10% drop. But yeah, for the moment, we'll have to see what will come out there. Not quite sure. Yeah, a lot of questions coming out that really, yeah, okay. Yeah, a lot of questions which really I'm not going to have time to cover today. I will cover it in an any questions, any answers session in due course. But really, there's going to be too much to cover. Yeah, just finally on Trump, that man is in desperate condition, really, and I think that this escalation of the conflict with China, supported by Mike Pompeo, Peter Navarro, and others, is a real concern, and hopefully it won't escalate. A lot of it is rhetoric because of the run up to the November election, but hopefully it won't run out of concern. So yeah, there I'm going to wrap it up because we're all approaching the hour. We've covered a lot of ground. I hope you found it interesting and enjoyed it. Next time, we're not decided when the next one will be, but let me have your comments if you enjoyed it. If you'd like to see more, we normally do a quarterly session in association with Brabner's, We did that one in April. We had big attendance for that one. So if you enjoyed it, let me have comments. Things you didn't like, just let me know. Like to see another one, then please do let me know. If you're not signed up for the Saturday Economist, visit their website, thesaturdayeconomist.com, and sign up. If we're not connected on LinkedIn and you want to be, I would like to be, send me a link and we'll do that as well. So for now, it's been great being with you this morning. A lot of you, some friends, some good friends who I haven't seen for a long time, and we had a good lunch soon. I hope we get to do that soon. But for now, stay well, stay safe, and be alert. And thanks for joining me this morning.